Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today we're going to look at another household giant. In America it's called Budweiser. The formal name of the company is Anheuser-Busch InBev. And what is that? Well, if you live in America and you're watching this program from New York or Chicago, that's Budweiser. If you're in Belgium, and the shareholders in this company aren't just American, they're Belgian, they're Brazilian, they're a global presence. Stella Artois is the brand in Belgium that went into this merger. It's a global giant. Why is it in the news? It's in the news not just because it's the biggest beer company right now on the planet with 20% of market share, but it's also made a bid. It's also made a bid to buy SAB Miller, which is a London, South African brewing giant, also with a lot of assets in the United States. If I would give you the taglines, Budweiser, hey, this Bud's for you, that's that beer. And SAB Miller is Miller Time, which is Miller Lite and the original draft beer Miller that they sell. The question now is, Anheuser-Busch, that's what I'll call it on this program, sells at $109 a share. Right over here, you can see it's down from about 125, so it's come off a little bit as the markets have come back. But you can see, looking at from the merger, it's been a great success. The stock has a nice yield. It has a very high multiple, 21 times earnings, earns about $5.60 a share. It's a success. These guys know how to run a company, and these guys know how to make beer. So two things in a world of brands, and they own a lot of brands. They own big brands like Bud and Bud Light, but smaller ones that are important in local global markets. If they could get SAB Miller, it would give them 30% of the global beer market, really a commanding position. I think almost too commanding. I think they're going to have antitrust issues, especially in China, especially in the United States, if the bid goes through. What have they bid for SAB Miller? About, I think the figure is they're paying 44% over the previous price of the stocks and valuing the entire SAB Miller at about $100 billion. So not a small deal at all. Is it a deal you want to be part of? These are two very successful companies. Each has a niche that the other somewhat overlaps with, but they are different. Budweiser very strong in parts of Europe, parts of Latin America. They could together take on the world. The problem for you as an investor is you're taking very expensive shares. 21 times earnings is high in my estimation, and buying another equally expensive stock, SAB Miller. Overall, I like the companies, I like the concept, I see what the management's doing. Too rich for my blood to play at those levels. Maybe in a retrenchment, you can get Anheuser-Busch in the 80s or even in the 90s, and that might make it worthwhile. It is a good company. It may belong in your portfolio. 109 could be expensive. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.